Hi friends, happy St. Patrick's Day. It is March 17th, 2020, and we wanted to spend a few minutes just to sort of check in on what's been going on in the markets. Before I do that, I was reminded of a quick story earlier this morning. So in 1989, the Chicago Bulls drafted Stacey King. Stacey King had his first debut as a Chicago Bull in November of that year, and he scored 5 points. And it was a little bit of a disappointment, and so a reporter asked him after the game, "Stacey, you got to be disappointed with your opening game. Tell us, how does it feel?" And he looked at the reporter and said, "Well, I'll remember this day forever as the game in which Michael Jordan and myself scored 59 points." Right? Michael Jordan scored 54 because it's all about perspective. And so that's what we want to talk about today. Scott, given everything that's gone on, yesterday was a nearly 3,000 point slide in the market. What should our client's perspective be?
3,000 points down. Wow. I mean, in that one day, that is painful.
Yeah.
But looking back over our year, March of last year to now, we've talked to our clients about prepare for the volatility to come. We had an amazing year last year, and we were saying we're moving into an election year, and we expect a lot of crazy. We did not expect crazy would come from an event
That's right.
that would drive the markets down 30% or so. And so this virus has been the event, not the election at this time. So everyone was ready for volatility, but they weren't ready probably for yesterday. But when you look year over year, it's been a much better picture than just one day.
That's right. So let's just ask the question that's probably on everybody's minds. Are we in a recession?
Nope.
Why not?
We're not in a recession. A recession is typically 3 negative or contracting quarters of earnings. The second quarter of earnings is going to be ugly.
Yeah.
But right now, the market is pricing in deep recession. So the third and fourth quarter of this year, by the way, we do expect the virus to leave. There will be an other to this. The
Other side of it.
The Paul Harvey, the rest of the story.
Yes.
But when you're in the chaos, when you're in the pain, like Christmas 2018, where the market fell 22%, and they were calling for recession.
That's right.
We're not seeing recession, not at this point, but we do see deep cut in earnings for the second quarter, and then recovery in the third and fourth quarter. A V bottom would be beautiful.
That's right.
Right? Just like Christmas about 14 months ago. A U bottom, still beautiful. But we're looking at what if we're here longer than we think. And so we want to get paid while we wait. So we're really looking at dividends and yield in our stock portfolio. But probably even more importantly is, who do we want to be invested in on the other side? Where do we see the opportunity as we emerge out of this viral time?
Yeah. So before we finish, you were saying something I think is really important. The market is pricing in recession.
Deep recession. The market is pricing in worst case scenario.
Which again, what you said was, by textbook definition, a recession is 3 quarters of negative or contracting GDP. Mm-hmm. So we haven't even had one, right? So anything better than 3 consecutive quarters
will be really received well in the markets.
That's right.
And it's interesting, if you look at lost earnings is one thing, pent up lost earnings is another. So there is pent up demand as we all stay in our homes, that when we're unleashed into the market, that money will spend. Now, people will lose their jobs, and there will be some, but other people are gaining jobs. Remember, the economy was robust, adding jobs and expanding when this event came along.
That's good. So on this St. Patrick's Day, there's a lot to be thoughtful about, a lot to be excited about as we look forward. But we want you to stay healthy, and we will continue to deliver content out as day-to-day progresses and as changes come. And if you like this video, share it with your friends and family. We'll see you next time.